Bitcoin had the largest drop in its history since the FTX collapse. And now, 24 hours later, the market has reversed, putting in one of its largest upside gains. And to be accurate, I believe it's the second largest in this entire bull market thus far. Now, this is one of those tricky times in the market that many are jumping in late. The emotions are running high. Any suggestion of further downside is met with "you're talking FUD." But I want to share with you some very, very important points about a bull market. And this comes on the back of yesterday's rise and where we currently find ourselves in the midst of this 6-day correction after 3 solid days down from the peak, which if you watched yesterday's video, you know how important that particular signal is for the entire bull market. Before we dive in and get into some really deep stuff, make sure you hit the like and subscribe to the channel if you haven't already. Your home of macro cycle analysis, Bitcoin, crypto, the stock markets, and of course the real estate cycle. It's all here on the channel. Join us for the journey. We've got a lot to get through with Bitcoin as we've seen this reversal day. Is this the end? I want to get into that particular data and what that means moving forward, as there was a very important question from one of you guys here explaining why a further upside would actually be very, very bad for cryptocurrencies. We'll get into that in just a moment, but let's cover the news, the headlines. First up, just looking at the interest rates. Interest rates were paused yet again. That has led to the interest rate probabilities just shifting slightly to the left. Remember, as we've been covering here for months now, looking at how all of these interest rates had been shifting to the right, meaning that there was less chance of interest rate cuts amid rising asset prices. So we've seen real estate going up, we've seen stock markets going up, we've seen Bitcoin and cryptos going up. Why would the Fed cut interest rates if everything is still going up? That's essentially inflation. You're seeing prices increase. So the interest rate probabilities had all begun moving to the right, showing that it was less likely that we would see any sort of correction. Now, this is the first chance we've seen for at least the May meeting coming back to the left. Maybe a tiny chance here of a cut, or at least the chances have started to move that way. We're seeing a couple more move slightly in that direction just after this most recent pause. That could potentially be the market sentiment just trying to hope for an interest rate cut. I think the only way it's going to happen is if we do start to see some sort of cooling off of asset prices. Obviously, we'll wait and see. I don't control these numbers. We just continue to watch them and look at how the masses were wrong yet again of interest rate cuts in basically every single meeting throughout 2024. Remember, back in January, this is the post here in January, and even a few days earlier, this December cut was going to be over here, down to 3.5. But they were predicting that we were going to be at 4.75 to 5% interest rates by now. That's at least 0.5% cut. It hasn't happened, and we've remained here for these last 2 meetings. We'll see what happens for May. It looks like we're still going to end up at no cut for May, but they're hoping for one in around June. The big one, the 18.6-year cycle, I'm looking at us being on the cusp here of the breakout into this winner's curse phase. This is roughly the winner's curse phase over the next couple of years. That essentially means everyone thinks that they are an absolute genius in the market. Prices have been going up, they've been making money, or at least paper gains. And with their real estate purchases, they're also making paper gains, potentially taking out some of that equity to go and blow it on Bitcoin or cryptocurrencies. And that essentially leads to this stage here. This is the winner's curse phase, where markets start to ramp up in those gains, and everyone thinks that they are just smarter than what they are when it comes to investing. So that is the time to be cautious. Now, this is a really important point in the markets, no matter where we are, whether in the stock market, real estate, or of course Bitcoin and cryptos. And we're looking at how to play this game as we get into this particular highly emotional time. We definitely see it in the comment sections after such videos of yesterday suggesting that it could be a longer top than expected. People have just gone mental talking about it being FUD. Just focus on the data and the facts from the charts, and then you look at the probabilities of what could happen this time. If certain things happen, then how do you play that game? That's the whole point of investing. And I'd rather share it with you in terms of how to play the game like you would going to war, or you would playing another sports. Maybe you play basketball or football, soccer. You're not just going to go out there and go ham and expect to win. You have to have some sort of strategy going into it. So that's what we're looking at here for this last stage. Things I think are going to get pretty damn tough, and just the talk of taking profits freaks people out and they jump straight to the whole FUD game. It's okay to take profits, especially when you've gotten in so early. That is a big thing here. Now, looking at the stock markets, yesterday was the highest daily close in history. Now we've got a new highest daily close in history with even higher prices at 5,300. So remember the levels we were looking at for the S&P 500 as it continued to grind away, and in a bull market, that's the main theory that we have here for the bull markets as they continue to grind and grind as they pass through new all-time highs. And the main thing that people are looking at here is a hope that they get a bigger correction. Again, it's just gone on an absolute grind, pushing to new fresh prices. The upside target now, 5,400. We've hit the 53 on the futures market, looking around 54, 5,500 here for the SPX, and then up around 6,100 points. I also had the fractal here from the COVID drop, and it's running pretty well to that same sort of movement out of that low. So that's this particular move from COVID into the peak. You can see the pace of this move to the upside is basically at the same record rate that it was coming up through that absolute destruction of the COVID pandemic there, 35% drop. So you can see if it follows it exactly, we'll get to the 75%, have a bit of a pullback and on. I'm not suggesting that that's what happens. The main thing here to look out for is the grind up here, the grind up effect of the bull market within the last stage of the 18.6 year cycle, which could then potentially get even more ridiculous. But as things get more ridiculous, expect more volatility, expect bigger pullbacks if and when we get to that type of period in the market where it starts to go a little more vertical. At the moment, although there's been no sort of pullback here, no real pullback, you can still see it's quite methodical. We're still just grinding up in this particular pattern here. So let's wait and see whether we get some sort of pullback, a big spring out, and then you start to see that volatility later in the cycle. For now, things are still on track for this everything bubble to continue up. The NASDAQ also put in a new all-time high close and is attempting to grind back to that previous old top. The Dow Jones, new all-time high price, new all-time high close. It continues to grind away to the upside. The VIX continues to grind away to the downside. The bottom 2,000 US stocks, again, grinding up. No major closes here, but one of the higher ones. So it's still doing very well. The home builders ETF, new all-time high. Essentially, the home builders are still looking to make more profits over the coming years. This one is going to be a very big one to pay attention to, because once home builders aren't looking to make, at least the market's not expecting them to be making bigger profits, we could see some pretty severe signs of the economy rolling over at that point. That's the big one that I think most should pay attention to. What do I know? I'm some guy on YouTube, right? So the Australian market also pushing to fresh prices here, just opening again for Thursday. And we could go down the list, but essentially everything is looking pretty damn rosy when it comes to the stock markets. So while everything is rosy, it doesn't mean it's going to be like that forever. And I think this sort of mindset starts to set in for the majority of investors, that things are going to be all right. We've made it through the toughest times. We made it through 2022 with interest rate rises and inflation, and everything's going well now. The market sorted it out and prices continue up. We made it through the COVID drop, the biggest pandemic that we've ever seen in our entire lifetimes, and we haven't seen anything that large for 100 years earlier. So when you start to weigh up all of the different types of reasons how we could be coming out of this and people just forgetting the past, then you really start to wonder, how should I be trading these next stages of the market as we continue up into this sort of bullish territory? And so if you're wanting to dive into that a lot more detail, especially for your longer term trading as well, check out the Investor Accelerator, TIA Premium. There's a link in the top of the video description. We also do short-term trading over there. These guys are crushing it with their short-term gains for cryptocurrencies, hundreds of % return. So well done to you guys. Plus there is a lot of chat channels here for all of our members after they've gone through their courses and basically to discuss different things along the economy, their investment strategies, macro cycles, all sorts of things over here. So check it out. Link is in the top of the video description. Let's continue on with Bitcoin and cryptocurrency now. Over the last 24 hours, obviously Bitcoin's jumped up about that 9.5%. Extreme greed. We're back there again. Yesterday, 74. Now we're up to 78 on the fear and greed reading. Do note that we can hang out at these higher greed readings for quite some time. Just like we did with the previous cycles, we're hanging out in the 80s and the 90s for quite a few months there. I personally like to see corrections because that gives you some sort of reset in the market. And as I said, it'll get us over to this particular question in just a moment. There's a couple more things to get through here. Yesterday, we saw the biggest, if I'm not mistaken, the largest outflows for Bitcoin in the ETFs in its entire history, going back just 2 months now, 2.5 months. So some big days out there. And of course, Bitcoin also suffered on its price, coming down quite substantially. Its biggest day since FTX. With the search volume, Bitcoin is the word. It is still dropping off here. The last couple of weeks since that peak in March 3rd to March 9th, we're still dropping off in the search volume. So it's something to pay attention to. I do like to see this start to roll back up and put in higher lows as it breaks out into new fresh prices. Take a look back at the last 5 years instead of the 12 there. It's not doing bad. I still think there's longer to go in this cycle, but it's just natural for the markets to cool off, even if we have big events in the background. We have big narratives going on like the Bitcoin inflows for the ETFs, etc. It's okay if things do cool off and we get to accumulate again for that next run. I know some people are really starting to get that, but now it's time to have a look at this here. So can you please explain why it's worse if crypto rises from here as opposed to correcting downwards? So there was another suggestion that we're going into a super cycle. If this is your first cycle within Bitcoin and cryptos, then don't get too swept up in the term super cycle. That has been around since every other previous cycle. I started in early 2017, back around now, actually, March, April of 2017. And the word then was we are going into a super cycle. This thing just kept going up and up and up and up. And then huge volatile corrections to the downside. And all the way back here, most were still thinking that this was about to reaccumulate to go into another massive run to the upside because we had a super cycle on our hands. Lo and behold, we collapsed. Bear market ensued. It was very, very, very quiet at this time. Big pump up. And then again, COVID happened. Next move happened. The next bull market came around. And when this next bull market came around from the last cycle, guess what happened again? We heard super cycle. It was going to be a super cycle. This time, the super cycle, however, had a different meaning. It needed to pull back 50% and then continue on. There was all different sorts of meanings. If you're invested in that sort of narrative, maybe you remember it, but essentially it was talking about a super cycle. Here we are again. The next cycle, the third cycle since 2017. Well, yeah, third including that one. And again, we're hearing about a damn super cycle. I think the sooner you can get out of these mind games of narratives, the sooner you're going to be much better off trading and investing for yourself, being very confident with how you trade the markets, and you're able just to put that nonsense aside. Okay, just follow whatever the chart is doing here and just look at the probabilities. So yesterday we saw this bar here, and I said it's not over yet. The dump, there could be lower lows coming in. Let's just watch the chart and have a look at the probabilities. So I've got 8 days here. The first thing here is we had the signal, 1, 2, 3 days down, red, red, red arrow, okay? That particular signal there from a top, mind you. It's not just any time in the market, it's from a very significant top. 8 days was the quickest time that Bitcoin has recovered from one of these signals. And if I'm not mistaken, it was back in 2017. So we had a punch up to roughly 8,000. We had the 3 days down, and then the market snapped back and was able to come back to that previous top and put in a new high within 8 days, or on the 8th day. From there, the market just took off. A little bit of time there. November had some volatile bars and took off into this final peak Again, 3-day down signal, and it was all over from that point. And so from that 8 days, from all-time high, the signal happened, and then it broke to new all-time highs again, to the peak of the market, there was 31 days. So 1 month after it broke into a new all-time high, the cycle was over. And so if we're concerned with why would it be bad if we were to break into new all-time high prices, and by bad, I mean possible end of the cycle early, a top coming relatively soon, I would suggest that this would be an interesting point to have a look at, because you see 8 days after that signal, market breaks out, and there's only 1 month to go. These shorter corrections typically happen towards the end of a cycle, because essentially the masses are here and they're just hoping for to get to their $1 million status sooner rather than later. They basically just want to see this thing pump. They're expecting that they're going to take profits at the exact right time to make their millions, or at least this thing might go more than double like it did here. 8,000 basically made it to 20,000 and get those exact points, basically make their money. So if you don't see some sort of consolidation, at least with a significant time frame in mind for that period to occur, then it's less likely that the next pump is going to be very sustainable. And like you could see pretty quickly after that top, 1 month after the breakout, you had the signal again. There was a complacency bounce. Note that point now. We're going to get into it in just a moment. There was a complacency bounce there, and then the market collapsed from there. It came all the way back to that breakout point from when the market went ballistic. So that was that November period there of 2017. Market came all the way back. You lost all of those gains from that breakout point. Bitcoin basically went sideways for the next several months until it collapsed down to roughly $3,000. Do I think that's going to happen again? What do I know? I'm just looking at the timeframes for consolidations after these signals. The signal was the 3 days down, the 3 red arrows from significant turning points. The shorter the time frame, the less likely the next pump is going to be sustainable. We could even look to the most recent one, which was 13 days that happened in February that led into March, into that banking crisis. So this was at the start of the bull market, the start being from the FTX collapse in November 2022. We had 13 days until it reached a new fresh price, not a new all-time high price, but a new fresh high. Okay, so you'd gone through the bear market and this bull market started. This was still a point where most were hoping for lower prices. They were telling us about the recession. They were telling us all sorts of things, how this market had to collapse. You guys might remember from there, March 2023, I said it was extremely unlikely that that low would ever be broken for Bitcoin, especially in that cycle. Let me know if you remember that in the comment section. For that particular low, based on several other rules, I was saying it's very unlikely that's going to be broken. Market comes up, comes back down. We get the whole the dance here for 7 months, and then of course the rest is history. So what I'm looking at here though is 13 days to go from that signal, red, red, red. Blacks are okay in the middle, but not blues or greens. And then it was 13 days to that top. You can see that it still broke that top again, but it was basically over at that point anyway. It got a little bit higher. So maybe this can happen now, and that's going to fuel even more excitement into the market that this thing has to pump up higher. Maybe it does. I'm just looking at probabilities. I don't know what's going to happen on the black side of the chart. I'm just looking at the possibilities based on what we've seen in the past. And so even though it did get back past that level, it basically wasn't able to do much more. So even if you were holding from there, you bought late, you're hoping for gains. That is not the gains you're looking for. 24,000 to 25,000, $1,000. It's not what you're looking for. And then it collapses from there. This was a much better signal. Market pumps from that point. So that was the closest one we have to today that we can see from that signal, 13 days. And if you want to see some of the others in terms of the signal occurring at times that are similar to now, you had about 6 months. The signal is here in April, and then you had the complacency bounce. Everyone was far more excited here than they were here. So if that happens now, if we get far more excited as, let's have a look at the Bitcoin price. It's at 67,900. If everyone starts to get way more excited leading into this peak, but it's not able to break through that peak, then you should be very scared. Be very, very scared because those are lower highs. And if the lower high is formed on more greed, more excitement, not necessarily in the fear and greed chart, but more excitement than the top was formed, that is a huge, one of the biggest red flags you can see. That means get out of the market. That's what happened there. And I talked publicly about it on the channel at that point in May of 2021. Now, using that to your advantage on the flip side is exactly what I talked about here on the channel for that banking crisis. So we had the extreme low. Then we had the higher low. You can see from price. You don't need to be a genius to figure that one out. The market ran up and then put in a higher low. If you remember 12 months ago, banking crisis, extreme. The most extreme fear that we have seen in years since the COVID pandemic. It was even more extreme than the FTX collapse. More people got hurt in that than they did in the banking crisis, but the fear for the banking crisis was more extreme. It was plastered everywhere. That to me was a huge, huge bull signal to get into the market now, because the most extreme fear could not push the price down further than the previous fearful level, which means get in. This thing is going to go and rocket on. It's a bull market. We're going to see some pretty decent upside targets. So now that you got that in mind, looking at how that rule is used in both occasions, you got it from the tops and from the bottom to get in at really, really good times when everyone else is fearful out of their minds. You know the people I'm talking about, telling you the recession's here and all that sort of nonsense. Just be careful of it here. This is not FUD. This is just playing the game because no one knows what happens on the black side of the chart. So when we're looking at the black side here, no one knows what's going to happen. We're just looking at probabilities. Let's see if this is able to come back up and everyone gets super excited again, but then fails to break through. I would think that we'd probably see further downside. That's just one scenario. And most sort of hate having so many different scenarios, but I'll go on to this one with you guys now. It's about playing the game. You're a trader and an investor. Defense and offense. Which do you think is the time to play defensive? This is your money. Which is the time do you think is to play defensive, and which is the time to play offensive? You got the lows and you got the highs. Is it better to play defense at the low and offensively at the highs, or is it better to play offensively at the lows and defensively at the highs? I'll give you a moment. You can put your comments down below in the comment section. But the way I play it, and I think the safest way to play it so that you're here long term, is offense at the lows, defense at the highs. So defense is taking profits, protecting capital. That's defense. That's up here. Offense is deploying capital, pushing money in. Let's go, 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 go. Put it in there. Put it in there. At the tops, even if it's not the final top, even if this thing goes bananas up to 120, 140K, you've still got this particular move that's happened. And if you have played the game well and you've gone offensively at the lows, now's not such a bad time to maybe take something. Don't sell everything. You know, it could still be wrong. It could pump to 500,000 like Kathy Wood says, right? But the main point here is to understand what game are you playing as an investor. Are you going to play defensively at the lows and just put a little bit in because you're still a little bit scared, you're unsure, maybe you're only putting 10% of your portfolio in, and then as the market goes up, you're thinking, oh, now it's a bit safer to put more money in because the price is going up, and then you start to play offensively here, and you start to put 50% of your portfolio, 90% of your portfolio at the later stages. That's where shit hits the fan if it turns over. So what I'm suggesting is play offensively at the bottom, put in heaps if you can, if you have the conviction that we're going to see higher prices, as we've talked about here on the channel throughout the bear market. And that's not to say that we got every single low. That's okay. As long as you're getting in somewhere around the lows. We're not trying to catch the bottom, but just somewhere around the lows. And then as we start to climb up and things get a little bit greedy, like it does over here on the fear and greed index, there was no chance of us being in the extreme greed all the way back in 2022 or even 2023. We were just bordering those levels there at the 60s, just touching greed for a time and then basically got wiped out again. So there was no chance of us being in extreme greed at that time. As it rises, now I think is the time to start playing defensively to protect some of that capital, even if Bitcoin tomorrow blows through 74,000, which is the current top, takes off to 80, 90, 100,000. It's okay to do that because if you're in low enough playing offensively, you've got some significant returns here now, and that's the next stage to do. If you haven't got that, and how do you play the game? I think this is the difficulty. Now you have to kind of play both. You have to play defensively because you don't want to lose all your capital to the downside, but you still need to go on some offense so that you're making this worth your time and deploying enough capital. So now you've got to play offense and defense at this level if you miss these lows. And you can see how important it is to stay with the market throughout the bear and the sideways and then the bull market again, because it allows you to set positions. So if you don't find yourself in that situation and you're here now getting into Bitcoin and cryptos as the market's already pumped, you got to go on more extreme defense, but also more extreme offense. That's the risk, unfortunately. It's just the nature of the game. So wherever you see these lows form, you can see these swing bottoms form on the chart here. Our yellow swing indicator, a link to that is in the top of the video descriptions. You can start to place some stops under those levels. If the market breaks down from some of these swing bottoms, now you have to go back and back test these things yourself, then that could be a good area to at least take some of that profit off or protect some of the position. So I'll leave that there for now, otherwise that gets into another lesson on its own. And you let me know in the comment section if you want to hear more about how to play the market at these stages. And I'll try to include it for guys who have been in early, some who are getting in later, like now, and see if we can all do better in these markets longer term. I've also got the Wall Street cheat sheet here. You can see as we continue to rise, everyone's getting more and more greedy. And the worst thing to happen is that complacency at the top, where everyone thinks it's all good now. There's no chance of it going down again. We're about to take off again. I saw someone comment, if you listened to this FUD yesterday, you would have missed the bounce. And it's like, well, what if that was just a one-day bounce? You don't know. No one knows. If you got a crystal ball, let me know. Who knows if that's it there? What if it just comes back down now? We'll see. I wouldn't base a market turning from just one day. So if we get into this complacency, then you got to be careful of this next stage. I'm not saying it's over like that, but you could see some more time to the downside. That's all. We've got the time frames now. We just have to look for those signals. Maybe it's shorter, maybe it's longer. I don't have the answer. I just look at the probabilities from what's already occurred previously. Let's have a look at ETH and the total market cap. Just to cover off some of the altcoins. Justin, SEC pursuing legal campaign to classify Ethereum as a security. ETH, on the other hand, has decided to have a little bounce here against its Bitcoin value and against USD. It's had another significant move there. We had a 25% correction, and the largest one before was a 20%. If we go back a little further, there was a 24% here, and for that entire move, I think it was about 28% from the April top down to the September low. So it's still within reason there, even though it's had a pretty severe drop, and it's had a nice bounce there on some significant volume. I would do the same thing here. Looking at how we've discussed Bitcoin, the defense, the offense, if you think now is a reasonable time, then by all means, get into that, do what you need to do with that market, and make sure that you have some stops in play just in case you do see further downside that you can't cope with for your own emotional well-being. That's ETH. It's holding up all right here above 3,000. The 50% levels are back at 28 and 29, so not far away from those now. It's had several days down in a row, so something to pay attention to, and taking out some of those daily swing bottoms. The total cryptocurrency market cap has had a rejection at the tipping point. I don't think the game is over. It would be nice to see some sort of longer correction. Don't know for sure. It's down 22% so far. And I think the weekly close is going to be important here to see if it stays above the 50% level or not. If not, then we'll just continue to look for the bottoms, looking at particular percentage declines and also the 50% level as well. So keep those in mind. Something else that's done pretty well, Solana. Down a day, up another day, but still lower highs on the daily, but we've just got one in here. So this is looking a little stronger than the Bitcoin chart by way of 1 day, 2 days down, and then a reversal already. So it hasn't had 3 days down. 22% drop, and the previous drop was about 37%. 50% level is at about 137, 144, depending on the shorter term here or the macro. And for a percentage move to the downside, that'll take you about 31% to 34%. So using those lessons that I talked about with Bitcoin, looking at the complacency bounce here, pay particular attention to your altcoins. You can see ETH on the dollar chart here is down a lot further from its recent high. There you go, about 16, 17%, than what Solana is, which is about 7 or 6%. So even if we were to see further downside, one could theorize from what we're seeing on the chart that you would see less downside on Solana just based on the recent moves here. It's only had 2 days down before a reversal, closer to the all-time high from the bounce. Doesn't mean it's over. Just keep an eye out to see if we can get back past the 200. But if it did see the downsides, then you might have a better positioning here for that next stage of the bull market. So I hope that was super helpful for you guys. Something a little bit more of a lesson here moving into these more riskier times in the market. Some stages where the emotions get really, really high, especially talking about tops and bottoms and super cycles coming at you and all sorts of different emotional narratives to try and keep you in the game when that's the time you should probably be getting out of it. Not all of it all at once, but just starting to position yourself to maybe climb out of the market. As we talked about in the lead up into that Bitcoin peak, going through from late February into March, we're looking at it rising up, just thinking, look, things are getting a little bit overheated here. Let's see how things progress. But yeah, if you are looking to take profits, do your thing. Personally, I'm not looking to scale out of everything all at once, but just on the way up, just like what happened at the lows. You just want to be chipping into it at those lower points. Hope you found value from it. Let me know in the pinned comment down below if you want to see more lessons like this built in within the update videos themselves. Otherwise, I'll see you back here for the next video. Like and subscribe, links in the video description, all of that. See you back here next video. Till then, take care and peace out.